The stock market saw some slight gains Monday after President Trump announced Saturday that the U.S. will impose 30% tariffs on the European Union and Mexico beginning August 1st. So as you can see, the Dow Jones closed the day up 88 points. The S&P is up nearly 9 points. And NASDAQ is up 54 points. It comes after the EU delayed retaliatory tariffs on the U.S., which were supposed to take effect today. The European Commission president said yesterday that those countermeasures are now pushed back until August 1st, leaving just weeks to reach a trade deal between the 27 member countries and the U.S. CBS News contributor Javier David joins us now. He's also a business editor for the Dallas Morning News. And Javier, thanks so much for being with us. Let's talk first about the importance of the U.S.-European trade relationship. And if it's imposed, what would this 30% tariff mean for businesses in the U.S.?
Yeah, it's a significant hit. Like close to $5 billion a day passes between the two countries. The European Commission says the transatlantic relationship, and this is a direct quote, the most important commercial relationship in the world. And that's not really an exaggeration. In dollar terms, it's worth $1 trillion annually. We have all sorts of cross-border links that traverse multiple sectors. We're talking food, agriculture, aviation, energy, technology, just to name a few. So the problem here is we have a trade deficit with the European Union, and nothing inflames the president's ire more than an imbalance of goods and services with a foreign country.
Now, Javier, you mentioned food, aviation, technology. What other products or industries do you think would be hit the hardest if there is a 30% tariff?
Yeah, a lot. Like, wine, cheese, fossil fuels, pharmaceuticals, machinery, airplanes. Airbus supplies a lot of planes to U.S. carriers like JetBlue, American Airlines, which is based here in the Dallas-Fort Worth area where I am, Hawaiian Air. Some of them have warned that tariffs will have a big impact on their businesses. So that invariably means they can and will pass those costs along to their consumers.
Yeah, not the food and the wine, Javier. Is this muted stock market reaction surprising to you, given how there's just been a constant shifting of trade policy plans from this administration?
Yeah, look, it's kind of the taco trade at its finest. Markets are banking on this idea that Trump always chickens out. It's in a construction he absolutely hates, but it's really the only thing that's keeping prices aloft at these levels. Simply put, investors really aren't scared enough of the tariffs at this point to just stop buying stocks. And they're banking on this idea that the president will eventually relent in his demands. We're going to get a real acid test soon because corporate America will start reporting, and they already have Q2 results. So those forecasts, those will include forecasts that they see in the future. But, risk appetite is as high as it's ever been. And that means that markets are going to be increasingly susceptible to downside risk.
Javier, as we had reported, President Trump has threatened to impose 100% tariffs on Russian trade partners if a deal to end the Ukraine isn't reached within 50 days. If that were to pass, come to pass, which countries do you think would be hit the hardest?
Very few actually. It's very few of these countries are going to be impacted because very few countries still trade with Russia. That means that there's very little um,
Mm.
um, possibility that we're going to influence the Russian government. Russians been sanctioned into oblivion, really, for the better part of the last 3 years. And the irony is none of it has changed pressure to change of behavior from them. So a lot of companies exited, particularly Western companies. They either sharply curtailed their activities there and they left. The only real big customers that Russia has at this point are China and India. They continue to buy oil from the country. Neither of them are going to stop doing it. The economy itself is kind of closed. They have high military spending and energy prices that have helped support it. But, when Vladimir Putin moved against Ukraine, you had all of these companies just kind of exit the market. And that means that there's really almost nothing left to sanction.
All right. Javier David, thank you very much for joining us.